Look, markets are melting down right now, clearly. It's rough out there. And I know some of you might be wondering, is now really the best time to start investing, or should I just stay on the sidelines and wait for better times? And honestly, I totally get it. Even though I personally believe that long term, this is a great time, amazing time actually, to start building positions in companies and ETFs you really want to own more of. But I also do understand the fear, because timing the market is really difficult. Because hey, no one really rings the bell when we hit the bottom, right? And that's why in today's video, we're going to do something a little bit different than I usually do. I want to talk about cash. Yes, not something I'm super excited about, but I think in times we're in is actually quite relevant. Where I hold my own cash positions, how I earn interest on it, and what are some of the best saving options for European investors, some of which I'll also apply for UK investors, because those interest rates I'm going to share with you apply to euros, pounds, and US dollars. And why we talk about cash in those times? Well, if you don't have any cash on the side, you might be forced to sell when the markets drop, which is actually the worst thing to do, because that's when people actually lose money, right? Otherwise, it's just a theoretical value that you see a lot of red in your portfolio, but if you don't sell it, nothing happens. If you hold on to it, in most cases, it will recover and go back to green. But if you sell when you're in the loss because you need the cash for something, an emergency, what have you, then you materialize the loss, and that's the worst position to be in. So let me be clear, being fully invested used to be my default. I literally wanted to invest every cent, but now I see the value of having some cash on the sidelines for sure. And here's why. First of all, emergencies do happen. Markets drop hard, and when they do, cash lets you buy when others are panicking, like we see right now. And if your cash is 100% in the market, well, your hands are tied. And selling at a loss, as we just discussed, that's the worst case scenario for any investor. And that's why I'm a big fan of having some kind of emergency fund on the side, plus a separate cash pile for opportunities, right? Emergency fund and opportunities. So for me, those are two different buckets. One that I really don't touch, it just sits there and accumulates a bit of interest. That really keeps me feeling safe. And the other position is basically a cash position that I can use to either deploy in the market if I really see a great buying opportunity, or maybe I want to treat myself to a nice holiday or buy a car or whatever it is, right? For that is my other cash position, because I don't want to treat myself to a holiday by selling my shares. That's not how I operate as a long-term investor. And I would strongly advise against doing so. But why I talk about this, because I don't just let my cash sitting in a bank account, where most bank accounts these days, they pay literally nothing or a measly 0.1, 0.2% without lockup period. And for me, that's always very important, not to be tied into a long-term commitment with my cash. Now, some banks, they will give you a high interest rate if you commit to 6 months, 12 months, but I don't like to do that. I like to be flexible with my cash, being able to withdraw it whenever I need it. That's the whole point of having an emergency fund, because you can't plan the emergencies, and also a cash position to deploy in the markets, which you also can't plan when that will happen, right? So I want them to be really, really liquid. Considering that the inflation in Europe hovers around 2 to 3%, sometimes even more, that means your cash is literally losing value with every single month you keep it in the bank, earning nothing on it, right? So you really want to be mindful of that. So what's the alternative? Well, finding a high yield savings account where you can really maximize the return on your cash, right? And that's not always necessarily banks. There are also great options out there. Most popular these days are certain stockbrokers that actually pay you interest on your cash. So here's what I'm personally looking for when I look for great cash saving options. First of all, no lockup period. I want to have quick access to my funds, right? When I need them, I can access them. Second of all, of course, very importantly, a good interest rate, right? Ideally, anything over 2%, the higher the better, especially in the times where interest rates have come down. You obviously really want to aim for the highest possible without taking additional risks. Thirdly, of course, reputation and regulation, right? Who's behind the platform? That is equally important. Fourthly, deposit protection. Is your cash covered by a government guarantee? And number 5, ease of use. I don't want to spend hours managing my savings, going in there with some clunky interface. So I really want to have a nice, easy go-to platform that I can use on a daily basis to manage my cash positions. Right, with this, let's jump over to my website. I'll leave a link down in the description below where I listed some of the most popular ones out there. Those links are all hyperlinks, so you can click on them and it will take you to the various offerings. And that's filtered by the highest euro rate. It shows you the euro rate, the pound rate, and the US dollar rate. And obviously, last update was in April. So obviously, those things are quite dynamic, right? As central banks are changing the interest rates, so will those providers. These are dynamic. This is the latest ones we see over there, but I'll be sure to keep this table updated so you can come back here every month and see where you currently get the highest interest rates on the various platforms. And well, right now we see at the top over here, Trading 212, which does pay you 2.7% on your cash, which is really not too shabby given the interest environment we're in. Actually, that's my favorite platform also to keep my cash. Majority of it I kept there for a while. Now I reduced my cash position a little bit, but for longest of time, I've been using Trading 212. especially for the US dollar rate, because that, as you can see, is arguably, together with Revolut, the highest one you can possibly find for US dollars. Now, obviously, some people have been asking me, Kai, if I'm based in Europe, should I change my euros to USD to get a higher interest rate? And well, the answer really depends on your investing style. If you invest anyways in US dollar denominated stocks or ETFs, well, then probably it makes sense to exchange some of it, and while your money sits there waiting to be invested, to earn a higher interest rate. If you simply do it to earn a higher interest rate, but you actually still need the money to pay for your living expenses or to buy yourself, a car next month or what have you, honestly, I would probably advise against it. While it is tempting to get a higher interest rate, right? I get it. Keep in mind, you're also going to have currency conversion fees and, of course, exchange rate conversion fluctuations. And as you can see, those currency fluctuations can be quite big. I mean, it really goes up and down depending on what season we're in and which period. So maybe when you need the money and you want to exchange it back to the euro at that time really gained in value, and you're going to get less euros for your dollars that you previously exchanged. So that's just something to keep in mind. So unless it's really something you want to have a long-term position or exposure to dollars, which you use to invest, or you go to a trip to America, whatever it is, right? It makes sense. If you just do it on interest arbitrage to earn slightly higher interest, I would really caution against that. Better stay in your native currency, whether it's pounds or euros. You know what you're getting, and still your money works for you, and especially for your emergency fund, because as we said, it should be for an emergency. So you don't want to have to be in a position to then, exchange it and think about exchange rate and what have you. It should be really readily available for you at any time. So honestly, for cash, I really recommend trading 212, especially in Europe, 2.7%. The interest is paid to you on a daily basis. You can withdraw it literally in an instant. You have it back in your account, and then you withdraw it to your bank account, have it there. So I almost see it like a bank account. The cool thing is trading 212 also added a card, so you can even use the card right away to spend your money. So then you have to transfer it back to your bank account. So I think it's really a nice ecosystem to keep your money in and feel safe and comfortable having it over there. Then next up, we have Revolut. And you can see over here, these are ranges. Basically, it depends on which plan with Revolut you're on. On the standard plan, obviously, you have less interest, and the higher you go on the plan, the more benefits you get. I'm currently on the Ultra plan, on the highest plan. So that's why I get on my euros 2.59%. And then obviously on the dollars, it would be up to 4.36%. So that's by far the highest one. And well, that's why you can also see over here, I actually keep quite a bit of money in my dollar account, 4.35%. I get it, which is paid to me. You can see every single day, almost $1. So I really love that. And why I have dollars? Because, I first of all earn in dollars, but I also spend in dollars. I live right now in the UAE. Summers we spend in Lithuania. So I use basically both dollars and euros, and I invest in dollars. So for me, it makes perfect sense. And still on my euros, I get 2.52%, which is also not too shabby. And of course, having Revolut on my phone anyways, using it for all my transactions with the Revolut Pro card to get 1% cash back. It just makes sense, right? It's a nice ecosystem. It's not just a platform that I have solely for interest that I have to log in and send money to, but I use it anyways, so might as well use the benefit of having those nice interest rates. Then we have a couple of other providers. One of them is Vivid. I personally never used Vivid before, but they have been really growing in popularity and seems to be quite a competitor to Revolut. Really user-friendly and nice to use. Obviously, they pay you 4% annually in the beginning, but it's only for the first 2 months, and then it drops to 2.6%, but still quite attractive and really not bad, and seems to be really cool interface. Then we have a couple of other players over here. Bank is a very popular one as well, but they all seem to be paying very similar rates. Trade Republic 2.5%. Now, obviously, I had my own experience with Trade Republic, which hasn't been the best, so I can't really recommend Trade Republic anymore. But if you purely use it for interest reasons, then obviously it's not too bad with 2.5%. Plus, as a German licensed bank, you know that your funds are fairly safe with them. We have N26 as well. It's another competitor of Revolut. Keep in mind, not all of them are available in all the countries in the EU or UK. So double check which ones is available. For example, Scalable Capital. I don't think they're really available in many European companies, a couple of them, but not all of them. So yeah, that's something to keep in mind. Mintos, quite interesting. It's actually a P2P platform where you normally get interest up to 12% or even higher, but they invest into long-term loans. Now they have something called Mintos Smart Cash, where you can basically withdraw at any time. And again, I value the flexibility, right? While you can invest in high-paying loans, where, as I said, the current interest rate is 11.85%. Naturally, that comes with a higher risk than you lock up your funds for a longer period. So yeah, that's something I'm right now not really looking into, but 2.5% without any lock-in definitely makes it a much more attractive option than most banks where you get literally nothing for your cash. Then we also have Lightyear, another one of my favorite brokers. Really can recommend them. Probably one of the cleanest interface. So if you already started investing, you might as well use a broker where you invest your funds and money, and have some of the cash waiting to be invested, or maybe set up automated buys, which you can easily do with Lightyear, right? So you keep your cash over there, and then every week, every month, however you set it up, it automatically uses that cash to buy more of your favorite stocks or ETFs through the platform. So that really makes sense. And obviously, again, it's fluctuating, but right now it's similar to all the other providers over here. Wise, if you transfer a lot of money internationally and send money around, you might be using Wise already. So here you get slightly lower interest on your euros, but on your dollars, it's actually quite attractive at 4.08%. And lastly, in the active brokers, one of my favorite stockbrokers of choice, I can really recommend them for investing. For earning interest on your money, probably not the best options. I really wouldn't recommend them for that. First of all, you see the rates are fairly low, except for pounds, it's quite attractive. The rest is not really that attractive. Plus, you see over here, you need to have a minimum balance to get the money paid to you, right? Let's say for US dollars, if you have less than $10,000, well, you earn 0%. Only over $10,000, you start earning the interest. So yeah, for me, it's really not that attractive. And with all of the other platforms over here, you don't need a minimum investable amount, right? On Trading 212, you can earn interest from as little as 10 euros or pounds or dollars, whatever you put there, and you earn interest. Well, it will be only a couple of cents, but still, right? And once again, no lockup period. So I quite like that. Definitely check it out right now. I would probably recommend for most people Trading 212 and Revolut. I think these are great options. It's readily available whenever you need it. It's paid out on a daily basis. So yeah, really, really nice. Plus, you're already in a nice ecosystem. If you invest with Trading 212 or Revolut, it just makes sense because you already have your money sitting in there. So might as well earn interest on it and then deploy it in the market whenever you're ready for it. Now, some of you might be wondering, what about peer-to-peer lending or crypto? And yes, platforms like Nexo, which I used for the longest of time myself, they do offer 10, 11% on stable coins like USDC. And I've used them in the past. They can be great. But of course, you're taking on way more risks. The same with P2P platforms, as just mentioned before, like Bondora, Mintos. They can offer you 9, 10, 12, 14%, but you often lock up your money and there's no deposit guarantee as well. So that's why in this video, I really want to focus on low risk, fiat-only options with high liquidity. So here's my takeaway. Cash really isn't dead. It's strategic and you want to have some of it on the sidelines. Keeping a portion of your portfolio in high yield, liquid, very important, saving options lets you stay calm when the markets drop, as we're seeing right now. It gives you time to think, to act, to invest when you want, not when you're forced to, which too many people unfortunately are. And I also want to tell you, you don't need to accept that 0.01 or 0.05% your traditional bank is offering you. That is not interest rate. That is a joke, and you should be going for better options. As we just saw, there are great platforms out there offering you interest rates from 2 up to almost 5% across your euros, pounds, and dollars. These are real regulated companies that you can use today. So once again, I'll leave a link to the overview and table down below so you can check it out, explore it yourself, run the numbers, so that way you can make your cash work a little bit harder for you, not the other way around. If you found the video useful, give it a like, subscribe to the channel for more weekly insights, and drop a comment below where you're keeping your cash right now. Any hidden gems that I should know about, let me know down below. Next up, check out this video over here. As always, thanks for watching, stay healthy, get wealthy, and I'll see you in the next one. Ciao.